Good afternoon, ladies and gentlemen. My name is Michalis. I'm one of the market analysts here at HF Markets, and I'd like to welcome everybody to a very special live analysis session. And it's a special live analysis session because it's one of the only sessions that we're going to see this year. Of course, there is other elections that we will have live events on, of course, but the US is one of the most important economies in the world. It's one of those elections that is not only going to affect US based assets and the US dollar, but it most likely, and I'll explain exactly how, will affect all indices, all commodities, all currencies, and even cryptocurrencies this time as well. So these are things that we're going to look at as part of today's live analysis. And like I said, it's very unique because it is something which is only going to happen every 4 years. Now, as part of today's webinar, we're going to look at the webinar in two sections. Number one, in the first section, we're going to answer some of those questions which everybody has been asking because we've collected these questions and we're going to answer it in the first 20 minutes of the webinar. Because a lot of people have been asking, when are we going to get the results? Yes, they're voting today, but if I go to Google and I type in, when are we going to know the next president? Every single article that's going to come up is going to come up with a very complex scenario of depending on how long it takes each state to vote, each state to count. Some states may take up to 13 days to count their votes. Some may even take longer. For example, going back into 2000 to know the actual next president because it was such a close election, actually took 34 days. And a lot of the articles online, for example, for some of these questions, they don't give clear answers. So, as part of today's webinar, I want everybody to be fully aware why it's important, how long it's going to take, what the current predictions are, and which are the important states. Because I can tell you now, people may think every time we're going to get a result from each state, it's going to create a lot of volatility, but that isn't the scenario. And I'll explain exactly why. For example, everybody knows in New York, they are going to vote Democrat. They will vote 100% for Kamala Harris. Whereas if we go to Florida, we again know that they're definitely going to vote Republican and for President Trump. So this is why they don't have a lot of volatility. So it's a shame for people to see that piece of news, see that announcement, make certain decisions in the market, and they don't really see the volatility that they wanted to see. So we're going to know exactly how we can interpret the elections. We can use the elections as part of our analysis in order to predetermine how much an asset's going to move and in which direction. And of course, we're going to confirm as well which are the important states. And depending on if we're going to get a Harris or a Trump president, how assets likely to move. Because we will show that based on economics and based on what analysts are saying, a certain candidate, if he wins or she wins, it will pressure certain assets and it will support other assets as well. So this is what we're going to be looking at as part of the first half of the webinar. The webinar is going to be approximately 45 minutes. The second half of the webinar, of course, we're going to go to the live MT5, the live market, real time, and we're going to look at technical analysis, and we're going to look at technical analysis and confirm exactly what the indications are. If the indications are that at certain prices we're going to have buy signals potentially, or if we're going to have sell signals, and depending on what indications we're going to get, what's how can we go about it and how can we plan that trade or those specific trades. So hopefully that's a very brief introduction of what we're going to be looking at as part of today's live session. Now, I don't want to spend too much time as part of this slide because most people actually know me. I've been in the financial trading markets for more than 10 years now. I hold two licenses. I hold a UK-based license as a financial advisor and also a CISEC license as well here in Cyprus. So people know me a long time. I've been a financial advisor. I've been a trader for 10 years. I just wanted people to know a little bit about my background so they know exactly that I am somebody that can be trusted to provide educational material. Now, even though I am a financial advisor and I have been in the past, it doesn't mean that here today we're looking to give financial advice or investment advice or trading advice. This live session is here for educational purposes only. Of course, what I do definitely want to do is give as much information as possible, the right information, in order for you to be able to be active in the financial trading markets during these elections with confidence, with knowledge, and with expertise. This is something which is extremely important to me. Now, a lot of people keep asking me, I'm trying to research and find out, the elections are today, everybody's voting today, but nobody, none of the news outlets, none of the articles, nobody's telling me when are we going to know 100% who the next president is. Like I said, back in 2000, it took 34 days. In the last elections, it took 5 days. So every time it is something completely different. So when are we going to know when the elections results will be known? And I'll explain exactly how this works, because America is a unique country because, like the name United States of America, it has individual states. Now, each individual states, they vote in a very different way. So, for example, if we go to Nevada, where there's not a very large population, there's not dense population either. There's a lot of countryside and rural areas. It's very difficult for people to vote. So in Nevada, people actually vote via mail. So of course it takes a long time to count those votes and for all those votes to be collected. Whereas if we're looking at New York tends to see their votes counted and released very quickly. So, how exactly do we know when we're going to get the results? And what I will say to people is don't be so fixed on getting the results, but actually be fixed of when enough votes have been counted, especially in those states where we don't know if they're going to vote Republican or Democrat. Now, concentrate on when within those important states we know who's likely to win, if it's going to be Harris or if it's going to be Trump. So, for example, over the next few days, there will be scenarios where on Thursday, for example, Pennsylvania will come out and say 70% of the votes have been counted, and based on those 70%, this candidate is likely to be the winner. So we don't know guaranteed. It's definitely not the results yet, but it's a very strong possibility of that candidate, whether it's Harris or whether it's Trump, is going to be the winner. That there is where we're going to see volatility. So, ladies and gentlemen, it could be within 24 hours, it could be within the day, but it may be up to 2 weeks as well. Now, generally speaking, on average, when we're looking at analysts, most analysts think it's going to take approximately 3 to 4 days at a very maximum. 3 to 4 days. Now, that can't be guaranteed, like I said. Technically speaking, it could happen within a day. It's unlikely to, but potentially it can happen within a day. Potentially, it can take a very long time. Like I said, back in 2000, when it was between Mr. Gore and Mr. Bush, it took 34 days, which is crazy. That's not going to happen this time, but like I said, it is a possibility. So, like I said, it could be within 24 hours, it could be within a day, it could be within 2 weeks. We don't know guaranteed. Most analysts believe that it's going to be within 3 to 4 to very maximum 5 days. The 2020 election, which was the last election, it took 4 days. Volatility, ladies and gentlemen, isn't likely to happen today. Today's price movement is likely going to be very similar to that we saw yesterday. We saw, yes, at some times strong volatility, but not a clear trend. If we saw, an impulse wave, it would correct after that. And then if we saw another impulse wave, again, it would correct. So we're seeing more of a widened price range. not a clear direction, because people want to stay out of the market, not change their portfolio significantly and change exposure until the outcome is known. Because, of course, like I said, a Trump president will support certain assets, whereas a Harris president will support other assets. And I will confirm as part of this webinar what certain presidents will support, for example, the US dollar and the US stock market. Another president will support, for example, gold, and support global stock markets rather than the US stock market. So these are all factors that we're going to look at today. Now, to answer the question, when we will know the results, the main volatility and the main results, ladies and gentlemen, are likely to take place on Thursday. By Thursday, a lot of the states will have confirmed who's likely to have been voted as president, and we're also likely to get at least 2, 3 of the swing states. What exactly is a swing state? Very simply, it is those states where it's not known if they're going to vote Democrat or if they're going to vote Republican. So again, it's not like Florida, it's not like New York, it's not like, for example, it's not like Maine, for example, or Texas. It's those swing states. They could because it's so tight, they could very easily swing towards Trump or they could swing towards Harris. So by Thursday, we will most likely be in a much clearer situation, have a clearer picture of who is going to be the next president. That's where most of the volatility will take place, because that's where the market starts pricing in the next president. So, like I always say during our live analysis sessions, a lot of people say, what's the announcement going to be and what effect is that going to have on the market? And it's not always about the announcement. The large institutions and the large players within the market, because I've worked with trading floors and I've worked with very large companies, they price in the rumor and they're pricing what's going to happen within the market. So, for example, at the moment, within earnings season, for example, they will analyze these companies and say, based on our analysis, we believe it's going to be a positive earnings season. And they will price that in September and in October. They won't wait for November until these large companies like Nvidia are going to release their quarterly earnings reports. They will price it in before that. And this is also the answer to a lot of people's question, why did we get something positive and the market declined? Because they've been pricing it for 3 months. The announcement wasn't made, and they've cashed in their profits, which is causing the price to decline. So a lot of people within the market, they say, buy the rumor, sell the announcement. So the same thing we also need to take into consideration with the elections. When we know who is likely to be president-elect, that's where we're going to see most of the volatility. And the most important things, like I said, will be the swing states. So you can see here the most important states. Now, it's not about which president or which candidate gets the most votes. There could be a scenario where President Trump, for example, may get 100 million voters throughout the United States of America, and Harris will get 75 million voters. But Harris could still win. Why? Because what actually happens, ladies and gentlemen, is each state will vote, and each state has, should we say, a simple way of understanding it, a certain amount of points. Now, those points are based on the population. So, for example, New York, because it's got a very large population, it could have, again, for example, 14 points. Whereas if we're looking at for example, Alaska, which has not got such a large population, it could have 3 points. So it's all about the point system. It's not necessarily just about the population. Now, because we know which states are going to vote for which candidate, because in their history they've always voted in that way, or should we say they've voted in that way for a very, very long time, for decades, should we say. But there's 7 swing states, and I'll confirm also which of these swing states is the most important state. These states, ladies and gentlemen, is basically throughout the last half a century the ones which sometimes they vote Republican and sometimes they vote Democrat. And here I'm actually going to confirm from the New York Times and also Forbes what their predictions are. So, ladies and gentlemen, Nevada. Nevada is one of the swing states. It's actually one of the states which is going to take quite a long time to count their votes. It's also one of the only states where they're actually voting mainly from mail, like I said, which is very strange. Now, if we look at the New York Times believes that Harris will win this swing state, whereas Forbes believe that Trump will win this state. North Carolina is split again between the New York Times and Forbes. New York Times believe it's going to be Harris. Trump believes it's going to be Trump. Wisconsin is fully Harris. Okay, so keep in mind it is a swing state, so it could vote Trump. It's not like, for example, Maine and Vermont, California, and for example, New York, where it's definitely going to be Harris. It's a swing state. It could be Trump. But both the New York Times and Forbes believe that it's going to be Harris, which is going to win in Wisconsin. Also, keep in mind that the vice president elect, Mr. Waltz, has also quite large connections with Wisconsin, which is also one of the reasons why they believe it's going to be both Harris. Georgia, New York Times believe it's going to be Harris. Forbes believe it's going to be Trump. Pennsylvania, New York Times say it's going to be a tie. Forbes believe it's going to be Harris. Michigan, New York tie. Forbes, Harris, and Arizona, both the New York Times and Forbes believe it's going to be a Trump winner. A lot of people also follow Mr. Leichman, who's a New York-based historian. He's got basically vote and account theory. That theory has been around since 1984. Every time there's an election, you will always see him everywhere on the TV in America, because what he does is, from those points system which he actually invented, he predicts who the next president's going to be. Very simple. He's always got it right. Since 1984, he's always got it right, except in 2000. And keep in mind, 2000 was extremely, extremely close. That's the one that took 34 days to count, because it needed to go to the very last count because it was extremely close. Now, Leichman has confirmed that, based on his theory, using these points, that Harris is going to be the winner. That cannot be confirmed. Like I said, he predicted correctly every single president through the election since 1984. Even some of the ones which were very unlikely that they would win. So, for example, Ronald Reagan, a lot of people back then said he was too old to be president. He predicted that he'll be voted in, and he was voted in. The only time he got it incorrect was in 2000. Like I said, predictions by him is that Harris will be the winner. It's not guaranteed. He could be wrong. A lot of people think he will be wrong. So, like I said, it's not guaranteed. But these, ladies and gentlemen, are all predictions from the two of the most looked at resources. Now, I'm going to answer two questions. Number one, which is going to be the most important? Number two, who are going to be the first to release their announcements? So Nevada, it's going to be somewhere in the middle. It's not going to be the last, not going to be the first. North Carolina, likely to be the first of the swing states. So keep that in mind. So if you're on Google and you're researching the first one you need to be researching and keeping an eye on is North Carolina. It's going to be one of the first, if not the first, swing state to confirm the announcement. Then you got Wisconsin. Results most likely will be known by Wednesday evening. So again, one of the first. Again, this is something you need to continuously be writing on Google. Wisconsin election results, or looking at it on Bloomberg, on BBC, on CNBC, and so on and so forth. So again, they're likely to be the first, one of the first. Georgia likely to be second to release their count. It could actually be either second or third, but again, they're going to be one of the first. Pennsylvania is likely to be one of the last to confirm the results. Michigan, unofficial results will be on Wednesday, but will be a lot clearer on Thursday. So again, they're likely to be one of the first. Arizona is likely to be one of the last. It could take up to 10 to 13 days. So, of course, that's going to be one of the last you're going to look for. To be honest, depends on how close the election is. To be honest, depends how close it will be. If it's extremely close, then of course Arizona, which is going to be the last to announce their results, will become very important. And people will be in front of the MT5, in front of the news, watching this, even though it's going to take 10 to 13 days. If it's not close, keep in mind this is not going to have any effect on the market. If it's guaranteed that Harris is going to win, of course, Arizona most likely is going to be Trump. It's not guaranteed. If it's whether Arizona votes Trump or not, Harris will win, then of course that will lose its impact on the market. Now, which is going to be the most important? Like I said, these are 7 swing states. They're not all equally important. They are the most important states because they're the ones that can swing in either way, but they're not equally important. Why? Because based on the population, some of them have higher points. The one with the highest point is Pennsylvania. Keep that in mind. Pennsylvania is going to be the most important swing state. Most likely not guaranteed, but going to be the deciding factor. Again, that's not guaranteed. But it is going to be the most important state. We have to keep an eye on this one because if we're going to get the first ones announced, and it's, for example, Harris again, but then Pennsylvania's Trump, then it becomes, again, a very, very, very close tie. And that's when other states start to become more important, such as Georgia and such as Arizona, especially Arizona, which can take quite a long time for those votes to be counted. What's going to be affected and supported if we get Trump? What's going to be affected and supported if we get Kamala Harris? So, the US dollar, if we're going to get a Trump announcement, a Trump president, okay, a lot of people are voting for Trump. It's possible, it's very, very tight at the moment. If we're going to get a Trump president, then it strongly influences the US dollar. Like I said, historian in America, New York based, very, very well known. People can watch him on YouTube, people can watch him on Google as well. He predicts Kamala Harris. Potentially, this is why the US dollar has been declining over the past 48 hours as well. But if we're going to get a shock, and we're going to get Trump supported and voted, then positive for the US dollar. US equity markets, mainly positive for Kamala Harris. If we're going to get a Trump, we may get some negative price movement, but it doesn't necessarily mean it's going to be a bearish trend throughout the whole of 2025. So I don't want people who start to think, it's going to be a very easy year. It's Trump. Everything's going to decline. We're just going to get another crash like we saw back 3-4 years ago. And just it's so easy to trade and speculate that downward price movement. No, it's not that scenario. International equities, what I will say is unknown whether Kamala Harris will support those markets, but what's for certain is that international markets are likely to significantly decline if Trump is voted. Gold, again, positive for Trump, no effect for Kamala Harris. Commodities negative for Trump, positive for Kamala Harris. Oil and Bitcoin, positive, positive, negative, and neutral for Bitcoin if Kamala Harris is voted. So we need to keep that in mind, ladies and gentlemen. Now, I'm going to go straight onto the MT5 now. We're going to start looking at the market and analyzing the market live. Because we've been speaking now for 26 minutes, the webinar always going to be going to be 45 minutes. Now, I want people to know what's happening within the market and potentially where signals are going to be triggered within the market. So the first thing I want to look at is the Dow Jones. The Dow Jones, I think, ladies and gentlemen, is going to be very interesting because if people want to be exposed to the equity market, but they're got a slightly lower risk appetite. So people, when they've got a lower risk appetite, because of the elections, which is understandable. When we have elections, we have uncertainty. If we have uncertainty, your risk appetite drops. If people want to invest, but they've got a lower risk appetite, then they tend to go to the Dow Jones, which is more equally exposed across the market and slightly stronger exposed to defensive stocks. So stocks which tend to hold their value when we see something very negatively happen within the market. So the go-to is the Dow Jones. Now, if we look at Dow Jones has been declining for 3 weeks now almost. It is extremely high if we're looking at the price movement. If we're looking at longer term price movement and price action, we're definitely in a bullish trend. We're significantly higher than the trend lines. Moving averages are very clearly moving upwards, but we have declined for 3 weeks. Now, if we look at the year so far, or if we look at the last 12 months, we've got not look at just 2024 so far, but we could look at the whole year. So here onwards, definitely very clear upward price movement. Now, what you will notice is every time we get 3 weeks of a decline, so this is 3 weeks of a decline, this is 3 weeks of a decline, I would even consider this as 3 weeks of a decline. It's 2 weeks, sideways price movement, and then a decline again. But again, I would say that's 3 weeks of a decline in my books. What happens? It very simply, 3 weeks of a decline, upward price movement, 3 weeks of a decline, upward price movement, 3 weeks of a decline, upward price movement. There's never been a decline for more than 3 weeks. And if we're going to measure the price movement, ladies and gentlemen, so for example, if we're going to measure from here all the way down to here, then that's 6.60%. If we're going to measure the decline from here to here, that's 5%. If we're going to measure the decline between here to here, that's 1.70%. So that's 13%, ladies and gentlemen. So that is just under 4% on average downward price movement that we see over this period of 3 weeks before the price starts moving upwards. If we look at the price movement at the moment, ladies and gentlemen, we had 4%. 4%. Okay? So we need to take into consideration, is that enough of a decline? Because on average, that's where we decline to before buyers start to enter the market. Of course, there is times where, like I said, it went 6 weeks. There's times it went 5 weeks. 6%, 5%, which is significantly lower. But on average this year, it's around 4%, which is where we are at the moment. So are we at a discounted enough price in order for, especially if we get something positive from the elections? Like I said, Kamala Harris can support global indices as well as the US stock market, whereas if we're looking at Trump, it's more better for the US stock market, but significantly negative for other markets such as the DAX, the CAC, on Asian indices, the FTSE 100 as well. So, depending on the elections, especially if we're going to get something positive for the Dow Jones, we are at a very nice area that is a discounted price. So people think to themselves, it's at a 3 week low, it's discounted. It's my opportunity now to enter at a better price. So if we go to the 2 hour time frame, ladies and gentlemen, we can very clearly see, number one, we decline down to here. Oh, bear with me. We decline down to here. But if you're looking at the RSI between here And here we're looking at upward price movement on the oscillator and downward price movement, looking at the swing low on the actual price. This is known as divergence. So this is indicating that that downward price movement is losing momentum. Now, if we're going to see, like I said, something positive from the elections, and we're going to continue to see divergence like we're seeing there. To be honest, that downward price movement has lost its momentum so far today. We can see it's more trickling upwards, more sideways price movement. That's understandable because of the elections as well. But if we are going to get upward price movement, then of course we can take into consideration not necessarily a strong 3 week upward price trend, because we're trading below the trend line here and we're trading below the price sentiment line here as well. What we could do is take three options into consideration. Now, number one, we can be slightly confident and have a high risk appetite, should we say, within the market. And we can aim for that average price movement, the 75 bar simple moving exponential moving average, which is this yellow line here. So it's just below that previous high. This is one thing that we can take into consideration. Another thing we can take into consideration is, that's an upward price movement of 0.5%. We want to look at 70% of that. So instead of looking at that price, we'll bring the target that we're looking for down to here. So that's 0.40%. So the reason why we're doing that is only just to lower that risk of the trade, because we're looking at a closer take profit. Alternatively, we can look at an ultra short-term trade, in which case we're looking at, for example, something very traditional is anywhere between 0.15% to 0.20%. So that's something that a lot of people do within the market, in which case we're looking at this being our take profit. But where are we going to get that trigger, ladies and gentlemen? So let's go back down to the Dow Jones here, ladies and gentlemen. We can see that sideways price movement. To be honest, the latest crossover we can see here is an upward crossover. We're above the 200 bar exponential moving average and we're above the 50 on the RSI. So that's indicating a very, very slight bullish bias. But again, we need to be cautious about that volatility, especially during elections. Now, if we were going to draw the Fibonacci levels here, ladies and gentlemen, we're currently trading above the 0.65. So we've had 65% momentum compared to the previous swing. A lot of people think that's enough to speculate in that direction. So based on that, ladies and gentlemen, we could already be at a point where we've got a signal that there's enough momentum for the price to increase upwards. So that's one thing to take into consideration. If people aren't comfortable automatically straight away entering into that buy, we can look at the average resistant level. So we've got a resistant level here, here, and slightly higher here. We've also got some lower resistant levels, which are basically here. Now, if we're going to look at an average, it's going to be somewhere in the middle, which is more or less at this resistant point here. So some people which may not be comfortable at entering at this price here, very simply, they may wait for the price to gain slightly higher momentum and cross above this resistant level to speculate upward price movement. Alternatively, ladies and gentlemen, if we're going to drop below this price here, which is basically the swing low, then that's an area where we can see an alternative scenario that potentially the price is going to decline. We can see that for obvious reasons. Number one, if it would drop there, we'll get a bearish crossover. It would drop below 50 on the RSI and drop below the 200 moving average. So that's why that's going to be potentially a signal. But keep in mind that if the price declines to here, just below all of those support levels, a lot of the time, large institutions, that's where they will buy. Where people are putting their stop losses or just below, that's where they will buy. So we can look to speculate downward price movement there. That's an option if we get a decline like that, even though it's not necessarily always the bias for the moment. Be cautious of this level here. So people may opt to put two take profits. So have the first take profit here, exit 80% of the trade here with a 0.05% profit, and then go to that next support level, which is here. So I have 30% of the next trade going all the way back down to that point there. So that's in regards to the US dollar, the USA 30. So basically the Dow Jones. What I will also say, because like I said, there is a slight bias towards the upward price movement, but it massively is going to depend on the elections. What I will say is there is some other components which are indicating upward price movement. Number one, here, if we look at the Dow Jones stocks, only one, two, three, four. So out of 30 stocks, only four are declining today. That's one thing we can take into consideration. You can see why this is important. Number one, only four are declining. And from the top 10 most influential, so here are basically the top 10 most impactful stocks, all of them are increasing in value. And keep in mind, Intel, which is one of the worst performing stocks this year so far, is going to be removed and it's going to be replaced with NVIDIA. So if you look at NVIDIA stocks, ladies and gentlemen, this year is up 182%. Intel's declined this year so far 50%. Nvidia, one of the best performing stocks of this year, the best performing stock last year as well. So we can see that that can be positive as well, potentially for the Dow Jones. And also keep in mind that they will be releasing their earnings report on the 20th of November. So Nvidia will replace Intel on the 8th of November. 12 days after that, Nvidia will release their earnings report. Look at the past 4 quarters. They beat their earnings report here on every single occasion. So again, that's something which is going to affect the market. Another thing though, which is going to affect the market in the more shorter term, is Home Depot stocks will release their earnings next week. They're also one of the most influential stocks. So you can see it holds a weight of 6.21% here, the fourth most influential stock for the Dow Jones. Now, another thing that we, of course, need to take into consideration, bear with me, my typing is terrible today. I'm shaking because of the elections. I'm just joking. So another thing we need to look at is the global market performance. The main thing I want to look at is the VIX. So here at the very bottom, you can see the VIX, the biggest red chart there. If we look at the VIX, it's minus 1.83%. Now, when the VIX declines, the stock market tends to perform better. So that's one indication for us to take into consideration. The other thing for us to take into consideration is let's look at the global stock market. Nikkei 225, Asian stock, performing well, improving today. The NASDAQ is higher, the S&P 500 is higher, the DAX is higher, so European index. The Dow Jones is higher, Russell 2000, the Euro Stoxx 50 is also higher as well. All indices globally are higher. So again, this is another factor, another element we can take into consideration. The last one, bond yields. Bond yields is higher. That's normally slightly negative for the market. The only thing I would say is it's only slightly higher. If that was 0.5% higher, I would say, guys, that's a risk for the stock market. But not at the moment. 16 points higher is not necessarily enough to send a tingling feel down my spine, should we say. But that's something we also need to take into consideration. So that's in regards to the Dow Jones. Now, somebody here says, can we look at the British pound against the US dollar? So looking at the cable, of course we can. Let's get the cable up on my charts. Now, the cable, ladies and gentlemen, what I want people to be aware of is that it could come under a lot of pressure, especially under a Trump presidency, because Trump has said and has attacked the UK and the European unions with tariffs quite strongly recently. So we need to be cautious about that. And also, generally speaking, the US dollar is likely to increase in value, according to analysts, if we get a Trump presidency. Potentially, a lot of people think because of that reverse risk appetite. So basically, a lower risk appetite, people will prefer cash, people will prefer the US dollar. But also keep in mind the Federal Reserve is likely to become more hawkish if we're going to get a Trump presidency. Whereas if we get a Kamala Harris presidency, potentially we're going to see something different with the British pound against the US dollar. Now, we're trading above the trend line. We're trading above the RSI as well, the neutral level, which is at 50. So the RSI is at 57. So we've got a slight bias here of upward price movement. The only thing I'll be cautious about, though, is look at this here. We're very, very close to that resistant level here, ladies and gentlemen. Very close to that resistant level. But if we look at the price movement here, we've retraced after increase this morning. Now, we went to that 65 and declined. If we increase back to that 65, then we're trading above the 65 on the Fibonacci levels, which is important to us. And it's also, even if we're not looking at the Fibonacci levels, it's a breakout of the previous swing high. So that is also another scenario where we can say potentially that's an indication of upward price movement. Otherwise, if we're going to decline below here, we can look at that as an alternative to speculate that the British pound will decline against the US dollar. The only thing I'll be cautious about, though, if we're going to see the US dollar decline against the US dollar, is if we're looking at the currency market in general, the worst performing currency of the day is the US dollar. The third best performing, so one of the better performance, is the British pound. So do we want to speculate that the British pound's going to decline against a currency which is declining today? Only if we're going to see a very quick change within the market for certain reasons. Also, we've got economic announcements today as well for America, which can have an effect on the market. But ideally, when we're looking at a currency pair, we always analyze the currency pair as three assets. People think of it as one asset, they analyze it as one asset. A professional trader analyzes a currency pair as three assets. You have the individual performance of the first currency against the whole market, the individual performance of the second currency against the whole market, and then the exchange rate itself. So we look at how the first currency is performing, how the second currency is performing, and how the exchange rate is performing in general. So, if, for example, we're looking at the Euro USD, and the Euro is increasing in value against the US dollar, okay? But if we look at the Euro, it's decreasing against everything else. Are you going to be comfortable speculating the Euro against the USD is going to increase in value when the Euro is declining? You may want to instead trade, for example, the Australian dollar, which is the best performing currency of the day. Ideally, you want to speculate a currency is declining using a currency which is a strong currency. So avoid two currencies which are declining in value or two currencies which are increasing in value. Why? Because you've got two conflicting currencies. Now, somebody here says, why the 65 level on the Fibonacci? Do you consider it more valuable than the 61.8? The 61.8 is the uh, more traditional level, and it depends how you're using it. If you're using it for a retracement, then of course you'll be using the 61.8. When we're looking at professional traders and financial advisors, uh, they're a bit cautious about the Fibonacci because they don't believe in theories. They don't believe in, trend lines. It's not like art. It hit this line, so people are going to buy. Would you buy a house because it hit the Fibonacci level? No, you wouldn't. Okay, you wouldn't. So don't expect stock buyers and shareholders to buy because it's going to hit the 61.8. But what we're using it for is not the Fibonacci levels, but I'm using it just to say when there's 65% more momentum, okay, that's where I'm happy to say there's enough momentum for me to buy. Okay, so that's what the signal is. It's not nothing necessarily to do with Fibonacci's, which are, a very, very old theory and random numbers. It's just basically saying, you know, uh, if we're going to get, for example, let's take the current scenario. It's source and downward price movement went up, source and downward price movement went up. We basically want to say, it's moved upwards. I want 65% to be momentum to be regained for there to be enough momentum to say, I'm going to buy. Because The difficulty, ladies and gentlemen, is if you're going to trade the breakout. So, for example, here, this is the downward breakout. By the time you break out, it retraces back upwards. So there's no point looking so much at the breakout. But if you looked at 65% of it, it would put you at an earlier entry, which gives you enough room to speculate the next impulse wave. It gives you another 35% of the price movement. So that's why we use 65. So a very well-known level, 65% momentum. It can be altered though. Some people may say, I want to look at the breakout. That's absolutely fine. Some people, ladies and gentlemen, may say, I want 70% momentum. I want 65% momentum. Retracements, ladies and gentlemen, most of the time go up to 60%. Okay? So if we get a price movement which is 100 pips upwards, if it's a retracement, it'll retrace 60 pips, which is why we say 65% momentum. Okay? So also keep that in mind as well. So look at this, ladies and gentlemen. Even as we're speaking, we're seeing a decline. We drew the Fibonacci level here. We can see it's dropped below 65. So people can potentially use that as an indication of downward price movement. Potentially. The only thing, like I said, you need to be cautious with the cable is that it's above the trend line here. And when we go to the 2 hour, again, it's above the trend line. The only thing I would say that could trigger this downward price movement is this resistant level here. It's gone back to that level where continuously it is declining at that level. Somebody says, can we look at the NASDAQ? And somebody says gold. We'll look at both now. Somebody says here, the Federal Open Market Committee statement on Thursday coming out after the US election plus the CPI next week. Is it going to be an interesting one depending on who wins the elections? Yes, of course. To be honest, though, it will be overshadowed by the elections, to be honest with you. Especially the federal rate decision. It's almost guaranteed to be 0.25%. So not going to have much of an effect on the market. What actually will have an effect on the market is more the press conference thereafter. The interest rate adjustment itself will not have any difference unless we're going to get a shock, which at the moment nobody is predicting that there is going to be a shock. Whereas inflation next week, that can be a driver, of course, quite a strong driver like it normally is. Now, if we go to the NASDAQ here, declining, trading below both trends, so the 75 EMA and also the 100 SMA. What I will say, which is a slightly positive, is the lows are slightly tilted upwards. And even though we're trading below the trend line, we are moving upwards on the RSI as well. So we're very close to trading above 50, which is the area we want to be trading above. So this is something we need to be also looking at. Here potentially, because we've got some stronger bullish price movement, we can look at potentially a breakout rather than the Fibonacci levels. So here we can see a double top, a third top. If we break above that, ladies and gentlemen, especially if we break above it without there being a retracement, if it retraces back down to here and then it moves back upwards, then maybe we're going to be slightly more cautious about that. But if sellers can't gain control and then it breaks up above that level, then potentially that's something, again, potentially we can look at a potential scenario to speculate upward price movement. So that's something that we can look at. The only thing which is worrying me slightly here is, look at this, ladies and gentlemen. Look at the RSI's divergence, downward price movements, where with the NASDAQ is moving sideways. So that there is a slight concern. Of course, today, guys, we do a lot of these live sessions. Today, we're getting a lot of 50-50 signals. That's normal because we're in the middle of the elections. It's 100% normal because of the elections. It doesn't mean we cannot trade. It doesn't mean there's not opportunities within the market. It just means we always need to have an alternative trade. So that if we trade and the market moves against us, it hits the stop loss, we close the trade in the opposite direction or alter the trade, and we look at the alternative. So that way we've made it up on the next trade. That's what we should be aiming for. Somebody also said gold. We'll look at gold as well. Gold quite strong upward price movement. A lot of people will consider that as a buy, ladies and gentlemen. Is it an all-time high? Sorry, is it a weekly high? Not yet a weekly high. Let me just check the date here. This was the 4th, so this was yesterday. So no, not a weekly high just yet. But it's trying to attempt to go above that 200 bar simple moving average. If we go to a 2-hour time frame, again, we're trying to attempt to go above the 50, the trend line, and the sentiment line as well. We're attempting to go above that. If we do go above that, then we do have signals that buyers are starting to regain control of the market. Let's go to a 15-minute time frame here. Here we can see quite strong momentum. Look at this, higher lows, higher highs as well. So really getting a nice upward price movement here. So potentially that's something people may wish to look at as an opportunity to speculate upward price movement. Some people may want the price to decline slightly lower and then draw Fibonacci again as an option. If it goes above 65, then enter the buy. That's something that we can potentially do. Or people may look to open 2 trades. They'll enter the trade instantly because of the upward momentum. If it retraces, then look at a second trade at a lower price based on the 65% of the Fibonacci. So, ladies and gentlemen, we've been speaking now for 51 minutes. We've looked at the swing states. We've looked at when the announcements will be. We've looked at which is going to be the most important state. We've looked at how the voting system works in America. We've confirmed when we likely will know who's likely to win the elections and who definitely is going to win the elections. Because, like I said, certain states may take 10 days. Some states, it could be as quickly as 24 hours that we'll know who's likely to win. So that's the end of today's session. We've answered all of the questions as well. We had quite a lot of questions. So we've answered all of the questions. Ladies and gentlemen, also keep in mind that here at HF Markets, we offer live analysis for free. We offer live webinars for free as well. With webinars, you can ask questions directly. You can have live one-on-one sessions with our market analysts as well. And in addition to this, you can trade without overnight fees and you can trade with super low spreads as well, which is extremely important, especially for scalpers and those short-term traders. But that's the end for today. Good luck. Trade responsibly. Trade sensibly. Of course, it's going to be a very interesting 48 hours. Of course, if you require any assistance, feel free to, of course, get into contact with us at any time. In the meantime, though, goodbye and have a lovely evening. Take care.